Chris is wearing a tie today, and I can't work out whether that's good news or bad news, but Chris is, of course, an established feature of these conferences, even more established than I have been, and of course much more important because he actually says things that are interesting and true. So without further ado, the economics editor of the Financial Times, Chris Giles, will take to the stage.
Thank you very much, Justin, and it's a real pleasure to be back here again. It seems like it's every year we're at a moment of change, either in the global economy, the UK economy, or the automotive sector. It's almost as if this conference is causing that change. Sometimes I understand causality and know that it doesn't work like that, but it does feel that sometimes. I'm going to go through a little bit of what people are talking about in the global economy and the UK economy and how it relates to the automotive sector. And it really is, at the moment, a battle between two forces. On the one hand, there's a force of resilience in the world economy and in the UK, and we shouldn't be too negative about what's going on. And then there's a force of fragility, and these two things are battling out. And we don't know at the moment which one is going to prevail, but obviously that matters. Now, if you're the UK government and you are the current Prime Minister and the current Chancellor, you would be forgiven for sort of sitting in a bunker, slightly peeking out at the world economy, a little bit like this, saying, well, look, we've had COVID, we've had inflation, we've had Russia's invasion of Ukraine, then we had tariffs, and now we've got a war in the Middle East. It's really difficult to operate an economy in those environments, and that's absolutely true. So the forces of fragility globally are really strong. And just to look at what they are in a picture, here's tariffs. And you can see what happened last year with Donald Trump's tariffs. Very high, as we've heard in the last panel, but also very volatile. So planning for what the tariff is going to be changed between April the 2nd, Liberation Day, May, changed when the Supreme Court had its verdict. And beneath that, the black line there is actually the effective tariff. So the blue line is what the headline tariff was. And you can see some of the resilience there because the world trading system, or the trading system with the US, changed so that the level of effective tariffs of what was actually charged at the US border didn't change nearly as much, but it went up a lot from about 2 to roughly 10% on goods. This year, we've had a new form of fragility, which is the war in the Middle East, which obviously came after Venezuela, threats on Greenland, threat to the Federal Reserve. All of that happened in the first 3 weeks of January, and then February was quite calm, and then in March we had the invasion or the attack between Israel and the US on Iran. And yet another oil shock. This is, we had one in 2022. For crude oil, this was of roughly the same size as 2022. For natural gas, much, much smaller in Europe. So overall, quite a lot smaller for the UK and for Europe. But oil was very high, and it's not just the spot price of oil that was high, it's the futures price. So even though the spot price has come down very significantly since the latest fragile peace agreement, stroke ceasefire, stroke opening of the Straits of Hormuz, the future price of oil is still pretty elevated. So we're not out of this yet. And the reason it wasn't a lot worse than this was the Gulf War happened at a time when oil stocks globally were incredibly high. And quite properly, all of particularly G20 countries released those stocks, used up the strategic reserves, and that helped the oil price not rise even further than it did. Were we to start the same process again now, oil stocks are now pretty much at normal levels, things would look a lot more difficult. So we had tariffs, we had an oil shock, but we've also heard, as we had in the last session on trade, we've really seen over the past 2 years really the death of the rules-based international order, whether it's on climate change, trade, you name it, where the worth and the use of the dollar globally, all of these things where countries used to play by the rules, and they were very understood rules, even if they couldn't necessarily be enforced. Countries understood what they were, and that's essentially gone. So now when you hear the EU essentially, fighting and scrapping in its trade deals and thinking of tariffs itself, that's a very different EU than we used to have to deal with. So that's the negatives. Those are some of the fragilities. But underlying that, global growth is still okay. Look at the latest IMF forecast. Most forecasts will be the same. The last couple of years, 2025 was basically fine. Pretty much the average of the past 50 years. The forecasts are the same. So tariffs did not undermine the global economy nearly as much as we thought they would do in April last year. In fact, when you look at what we now think happened in 2025 relative to what we thought would happen, we see that in each case, for pretty much every country, the pink line, which is the growth last year, what we now know we achieved, is to the right of the blue line. So every country did better than expected last year. And that shows the resilience. It's the resilience of industry, the resilience of the global economy when faced by shocks. We see this resilience in stock markets. We see it particularly in the new hope that AI, this is the NVIDIA share price, because it's the producers of chips that are really seeing the benefit of AI, or the AI fever so far. We see that there. And actually, one of the things that we've done at the FT is that we've now analysed our own reporting for how our sentiment in our reporting, and we can then weight that by whether it's an economic issue. And so we can create a daily index of our own reporting, and as you can see, it's generally been positive or more positive than the average from 2019 to 2024. We don't look at this and then think, oh God, should we change the way we report? This is just purely an indicator that we've been playing around with because this is the sort of thing that AI lets you do. So we see in the global stage this battle between fragility, which we know we're dealing with, and then resilience. And we also see this very much in the domestic debate. So you can talk about Andy Burnham, that he's got lovely eyebrows, he's from Manchester, or whatever, but let's face it, he's facing exactly the same constraints that Keir Starmer, Rachel Reeves, and the current Labour administration are facing. And although I don't know what Peter Carr's going to say in a few minutes, but he might well say that the UK is the fastest growing economy in the G7, which it is if you look at the first quarter of 2026. It was also the case for the first quarter of 2025, but not for the subsequent quarters. And we've got a little bit of a seasonal adjustment problem in our data at the moment. And underlying that, growth is slow in the UK. Growth is slower than it was in the 2010s, much slower than it was in the period before the financial crisis and earlier than that. And until we get much faster growth, or until we can achieve much faster growth, we're not going to find these constraints really lifting. You can have number 10 of the North, you can have lots more devolution, you could even change the fiscal rules a little bit if you so want, though that is risky, definitively risky, but it doesn't change the ultimate constraint, which is that the public finances are not very strong, the economy is not growing very fast, but equally it's not disastrous either. So growth has been slow. Inflation in the UK has also been too high for too long. Effectively, it's been above the Bank of England's 2% target for 5 years now, since 2021, apart from a very short period in 2024. And the pink line, I think, is more important here. This is another thing that we've been working at the FT, trying to find a really good underlying measure of inflation, where we've just essentially taken lots of other underlying measures and used a bunch of fancy statistics, to use a technical term, to create a very, very good predictor of underlying inflation, what inflation looks like. And that, as you can see, has been coming down in the most recent months, but is still considerably above the 2% target. And that has been above there for 5 years or so. As we hear all the time in the headlines, and another constraint that Burnham is going to face, taxes in the UK are high, have risen a lot, and are set to rise a lot further. So we are going to hit a post-war high in taxation. We've just about got there now, and taxes are rising further. The big tax which is going up is income tax. It's the freezing of the personal allowance, allowing inflation and fiscal drag to pull in a lot more tax revenue. That's not a terrible tax because pretty much everyone is paying for it. And when lots of people pay for taxes, even though it makes governments very unpopular, it does actually raise revenue pretty effectively. There's a lot of smaller tax increases coming as well over the next few years. Mansion tax, pension, changes to the way that pension tax relief is given, etc., etc., etc. These are much, much smaller in terms of revenue raising, and you'll probably hear more about them because money raised from taxing a small group of people quite a lot tends to create a lot more complaints than lots of people taxed a little bit. So those are some of the constraints that are there for the UK, for the new Labour Prime Minister, the new government, whenever we get that in a couple of weeks. But again, I don't want to leave you saying it's all really difficult, there's all this fragility in the world, the fragility in the UK, because things are also better than we thought. So some of the things about the UK economy are pretty resilient too. So first of all, might be, thanks for small mercies. The economy has done a lot better than we feared it would do, particularly a couple of years ago. Go back to 2022, the economy now is about 7% bigger than we thought it would be at this stage. This is the Bank of England's forecast. And that is for two reasons. One is because we've just done better. It hasn't been as bad as we feared. And secondly, because some of the data, when it's first published, is often in the UK, then subsequently revised up. So when Justin or I are reporting this, we report what's just happened, and then it subsequently gets better. So we often create a bit of a false narrative that things are worse in this country than they actually are. Another area that I think people haven't quite understood, we know taxes are rising, and it's not just going into a black hole or doctors' pay or whatever. It is actually improving the public finances. So this year, if we meet our forecasts, which probably will do, not necessarily, will be the first year since 2003 that the UK's deficit will be better than the G7 average. I mean, and again, the G7 average isn't great, so we don't want to sort of celebrate too much, but it is a demonstration that the tax rises are serving a purpose, and if they continue, so if we meet the forecast, that's a big if we meet our public finance forecasts, and we have got more tax rising coming, then we will suddenly be in a position of relatively stable public finances and sustainable public finances, which we haven't seen in this country for a very long time. It's also the case, and I think particularly important in an audience like this, that consumers matter, and where and how confident they are about the future really matters. And this year, of course, consumer confidence has fallen because we've had the crisis in the Gulf, much higher road fuel prices, petrol and diesel going up. That always makes people nervous about their own personal finances. But it's nothing like what happened in 2022. So this is just a change since the start of the war, both the Russia's invasion of Ukraine and the Gulf War. And consumer confidence has held up much higher this time than it did then. Part of that is because British consumers, for the first time in very many years, apart from the period of COVID when we couldn't spend, have been saving a lot. And the savings ratio is pretty high, And so there is some pent-up spending that can happen if people feel that the future is better than they had feared. And this is the main reason why the first quarter growth numbers are rather good, 0.6% in the quarter. And that was because it's not on this chart here because it only came out this morning, but there was quite a decrease in the savings ratio. It can fall further, and that can fuel, as it were, further growth in the UK, but only if there's confidence among households. Finally, I'll just say that there is interest rates can fall further, but it will take, the Bank of England will want to know that inflation is properly under control first, and financial markets, as you can see from the pink line, that's the latest where they are. They expect interest rates to go. They still are expecting a small rise. I think that's probably too pessimistic. I think interest rates are going to be pretty stable unless we see something go badly wrong in the Gulf again, and then we might well start to decline a little bit next year. So again, we're in this battle between resilience on the one hand, fragility on the other. What should business do in these circumstances? Well, you want to be keeping in your mind that the global economy, the UK economy, and the automotive sector is fundamentally pretty resilient, is doing pretty well. And so that's how you want to be thinking about things, while in the back of your mind also looking at the global economy, geopolitics. All these things can knock you off a bit, but underlying that, we do have a lot of resilience, thankfully, because otherwise things would be really depressing. Thank you very much.
Thank you. Any more questions? We've got a couple of minutes for questions if anyone does want to ask a question of Chris. The obvious one, if there were to be a new Prime Minister and he were to take over and he were to employ you from the Financial Times and say, Chris, I can't do his accent, but Chris, I've decided to have growth in every postcode, what would you do for him?
Well, the only thing you can say that definitively generates growth is to get rid of some things that are holding growth back, so restrictions. So what is it that might be restricting growth in every postcode? And the only thing you could say immediately would be some form of planning control. So if you went for something like a free-for-all, anyone could build anything anywhere, you would get growth. I mean, so that if you want to get growth, that is the thing that you need to look at.
Yeah. And when it comes to the EU and the summit, which we were talking about during our global trade discussion, and the feeling was it's incremental at best, and growth-inducing to an extent that is measurable or not?
I think in what is likely to come out of the summit, not necessarily measurable in that sense, because as Sam and Creon said, it is the really big things. It's the customs union and particularly the single market that really generate growth. And one of the depressing things is that you can't necessarily get back what you've lost. So we might have, we don't know exactly what we've lost, but the 6 to 8% number is perhaps the best estimate around, but that doesn't mean that even if we went back into the EU, that you get all that back straight away, because there are sunk costs, there are businesses that they've now got subsidiaries in the EU, and why would they necessarily bring them back? Yeah. So it would take a long time to reverse what you've done, and there is no sign politically that we're going to do that.
Can you talk yourself into growth? I think mention was made of Andy Burnham's eyebrows earlier on. There's quite a lot riding on them, isn't there? But he's got an easy manner and a smile and all the rest of it. And I'm thinking of the World Cup as well, and Germany losing on penalties and all that sort of stuff. Does it all, Schadenfreude, that wonderful German word, does it all, has it ever been properly measured, the extent to which optimism in a society makes a difference economically?
Well, that was the savings ratio I was saying. So yeah. If households, and it is because households are 60% of GDP, so it's household spending, if we can persuade households that the UK is a better place than we often the narrative is, yeah. and it's a more resilient place, and they can go out to spend quite comfortably, and there isn't a cost of living crisis in the way that we often hear in the narrative, though people are often really struggling. So I'm not suggesting this doesn't exist at all. Yeah. But to that extent, if people start to use some of their accumulated precaution they've taken, say, not throw caution to the wind, but spend a bit more, that enables companies to think that their future is better, invest a bit more, and you can get a virtuous circle. Now, it isn't, you can't suddenly get rid of all constraints. There is a constraint about the number of people who can be employed, how productive they are. That's ultimately what generates growth. Yeah. But we do have some spare capacity at the moment in this country, so we can get things moving, and it is that sort of confidence that is the sort of thing that can actually, I don't want to use the word kickstart because I hate that that metaphor, but we can kickstart a little bit of growth.
Yeah. Do you have a sense as well of the extent to which we can, you wouldn't say seal yourself off because we are still in a global environment, aren't we? But the extent to which in the slightly longer term future, it is possible for an economy like ours to exist and prosper in this new world that we were just having described for us before?
Well, I mean, I think that there's difficulties, but we need to look at, and you must never forget the strengths of the UK economy. We're still a large economy. I don't like the 6th largest in the world because I think that's measuring it wrong, but in the top 10, roughly, in the world. We have a highly educated workforce. We have a lot of installed capital and a lot of expertise that other countries would kill for. We have an extremely strong services sector, and a lot of that servicing is servicing both manufacturing as well. And our manufacturing sector, particularly areas like automotive, is world class. So again, when you're looking at the long term, if you have those abilities and capabilities, you shouldn't be hugely negative and just be worried and fatalistic about the prospects for the UK. We can do well, and clearly if we have good policies and we all pull together a bit, then we can do better than we think. But we are also an aging society with a workforce that is no longer going to be growing that fast, et cetera, et cetera, et cetera. So we don't get too excited and think we can have Chinese levels of growth either. Right.
Okay, well, look, you've curbed your inner Manchesterism, but curbed it only to some extent. Chris Giles, huge round of applause, and please. Thank you. Thanks a lot, Chris.